This is Eric Mwade for the weekend of January 25th, 2013. Let's take a look at how the US markets ended on Friday. We can see the Dow down almost 2%, 318 points lower. The Nasdaq was down 2% and so was the S&P 500. Gold was unchanged. Crude oil was down about 0.7%, and we see that the VIX was up 31%, almost 32% for the day. So Friday was a very actionable day. If we take a look for the week, the Nasdaq was down 1.65%, and the Dow was down 3.52%. S&P 500 for the week was down almost 2.6. So that's how it's looking like. Let's take a look at the monthlies here, which is also for the year. For the year, S&P 500 down 3.14. Take a look at the Dow, and you see that for the year the Dow is down 4.2%, and the Nasdaq is down for the year. For the year, the Nasdaq is down only 1%. So the Nasdaq is holding up pretty good. I've been saying that if we go back to the Dow, as long as the Dow and the S&P 500 continue having what can be said a negative year, which is down for the year, there's no need to be very bullish in this market. Also, the S&P 500 still, since we got off the gate at the beginning of the year, has been down, so there's no need to be bullish until the market turns positive for the year. So that's still what I'm thinking here. Let's take a look at the charts here, and we can see for the day Nasdaq was down 2, and again I contend because we broke below 50 on the daily RSI, and also because we seem to be breaking that trend line there, that blue line. But that blue line can also be drawn a different way, which is connecting the lows on the RSI on the daily. And you can see if you take the low here and this low here, touch this low, so 3 points, extend that line, you see that the market is exactly at that line there. So this could be where the market might find support. You have to be careful not to always assume it's down. We could find support off that line, or maybe eventually break this blue line here, which would be a major sell. Also for the Nasdaq is still holding above the 50-day moving average and still holding above 4,068, which was the previous daily closing high on the breakout on the way up. So we are still holding above those levels. I think the market, as far as the Nasdaq is concerned, is healthy. Take a look at the Dow Weekly now. And what we see on the Dow Weekly is that we broke below the previous level we've been trying to watch, so that breakout is failing. And also I talked about the possibility that this double top on the RSI would mean a sell-off was in store, and so that is correct. So double top on the RSI, but now you have to be aware that if you draw the lows on the weekly RSI, you see that we come precisely to where the market is trading right now. That is, if we connect the weekly lows from here, here, and here, you see that the market is trading precisely at that level. Now we also have to be careful, because with the Dow trading at 53.12 going into the new week, we have to be careful. If it slashes below 50 on the weekly chart, we are going to have another big down week. So we have to watch that 50 level. Otherwise, based on the line here, the market could bounce as it has been doing. Like the last time it bounced was here, which was this low here, and a nice move higher. So watch this line, the lows on the weekly, for either support or a break. I look at the Dow Daily, and you see that we are now below the previous buy point here of 16,097. So we are below that daily buy point, also below the 50-day moving average. We should have been here. So this market is starting to lose ground, and the last 2 days we've cracked below 50, hence the big down wash here. So we'll see what the market is going to do, getting very close to 30.90. if the market does eventually touch 30.90 on the daily RSI, it's going to suggest even a bigger move to the downside on a day-to-day basis. Take a look at the Dow Transports, and we want to take a look at the daily here, and you see that yesterday closed at all-time highs. Thursday closed at all-time highs, and Friday was down 4%. One-day action that took it from about 60s here on the RSI to trading at 45 in one day. And because we slashed below 50 on the daily RSI, hence we get this mega move lower. We are also back below the buy point, or actually close above the daily buy point, which daily buy point of 72.55. So trading at the 50-day moving average here, and also at the previous buy point on the daily, which is that level there. So we have support coming from the daily breakout and also from the 50-day moving average. We'll see whether we get a bounce. And don't forget that this line I'm about to draw here on the RSI, this line right here, has been support. The last time it was support was here, which was this low, was support here, which was this low. So if the market can find support here, this is also going to be a low, and the market might move higher. So we need to watch those levels to see what happens. Take a look at the S&P 500 weekly, and you can see we are back below that weekly buy point of 1805. So that's below that, trading below the 10-week moving average. And you'll notice now that we are back to this weekly RSI support level, this line that I'm drawing here. This line established from the low here, this low, and this low here. So if the market bounces off that line, and could be enough to stop this current sell-off. So anything below that line, if a break of that line on the RSI on the weekly, suggests that the market is still gonna see further movement lower. So for now, it's at support. Either it's gonna hold or it's gonna break. I look at the S&P 500 daily, and you can see today, or Friday, we began Friday trading at 50.34 on the daily RSI. As we cracked below 50, that's why we get this 2% drop, which makes a lot of sense. Now let's take a look at the hourly chart for the S&P 500, and you can see all this trouble began because this was a previous this was a previous hourly closing high, and so we tried to break out above that hourly closing high, and you can see we got rejected twice. Got rejected here, got rejected here, came close here, and after those rejections, you can see the market did eventually pull back. And don't forget that we were making higher highs, very important here, on the hourly, but we were making lower lows on the technical, and that was enough for this market to really drop and trend lower there because of that negative divergence. Now let's take a look at some world markets. We begin with the Brazilian market here, and this is a 14-year monthly chart. Take the lows here on the monthly going back 2002, and you see that we seem to be breaking this trend here, and so that could suggest this is a major turning point here. This market could be heading low. Now if we take a look at another world market in the way of the German DAX, and this is a weekly chart, if you draw a straight line connecting the top lines, here you see that we've been finding resistance on the upper side of this channel, and you can see this week we are confirming this resistance here by moving low, which makes a lot of sense. If we take a look at the Hong Kong market, you'll see that it's failed to hold breakout levels above this level here, so you extend that line there, and you can see multiple rejections here beginning of 2012, and again here over the last couple of months we've been unable to hold above that. So the Hong Kong market is also showing resistance. Take a look at the highs. If we take a look at the RSI, you see that this has turned into resistance, as one would expect if you draw the line connecting the top lines here and here. So all this makes sense. Also take a look at the Footsie, the London market, and you see that this daily closing high has become resistance, especially if you draw it like that. You see that we came very close here, got rejected, and over the last couple of days we tried to move above that blue line there and got rejected, and so this makes sense that we are pulling back to the 50-day moving average. If you take a look at the Footsie from a weekly chart, and you see that we were trying to make higher highs. Actually, we did make higher highs on a weekly chart, but the technicals made lower lows, and that negative divergence is one of the reasons why the market was down this week, about 2.5%. Now let's take a look at another world market. Take a look at the Chinese market, and we do this. Take a look at the weekly, and it's interesting. For the week, the Chinese market was up, unlike the other markets, and it seems to me like it's forming a head and shoulders, inverse head and shoulders formation here, here, and here. And if that's the case, we have to watch out here that it eventually needs to break out above this declining top line. So it's interesting that it's forming, a setup here that could eventually make it move higher. We'll see what happens, but it's interesting that while it's moving higher, the world markets are moving lower. So we'll see what happens, but it does make sense because this market has been down while most of the world markets have been trending higher over the last couple of years. So let's watch this market to see what happens. Of course, if it breaks below the neckline here, then that's going to suggest that this is not actually an inverse head and shoulders, and that the next movement is going to be to the downside. It's also important to note that we still remain below the 10-week moving average and the 13-week moving average. So this is still a bearish looking chart unless it can actually over time break out above those levels. Let's take a look here at the Japanese market and take a look at the daily. And you can see the daily here, the previous week daily closing high was there. Draw a straight line from that. And you can see this general area was resistance once here. And now we can look back and say that maybe this was also a trap. Now that we are back below the blue line and also back at the 50-day moving average. It remains to be seen what happens here, if we are going to hold the 50 or we are going to crack. My thinking is we might crack the 50. The reason why I say that is because of this negative divergence. This negative divergence here and here, lower technicals, while prices were making higher highs, could suggest that we've seen short-term or at least highs in the Japanese market that could be serious highs. So I believe this is going to eventually lead to the 50-day moving average also being breached and probably have to test the 200-day moving average at some point. Take a look at the Japanese market here from a monthly chart. And what's interesting, just want to show you the long-term monthly chart going back to the highs of 95, the highs of 2000, highs of 2007. Draw a straight line right there, and you can see we are now back below that line there. So this could be resistance. This is probably where we might start seeing a serious pullback as far as this market is concerned. Also, it happens to be a lateral break point. We broke down. If you draw a straight line from this break in 2007, so that break took place there. Draw a straight line from there, and you can see resistance coming exactly where you'd think, right there. So this could be where we've seen the highs as far as the Japanese market is concerned, down about 5.5% in 2014. Quick look at the Australian market here, and we take a look at the monthly, and you can see the monthly thing that I was looking at here was this top line's resistance on the RSI on the monthly for the Australian market, and so this could be rejection here, and maybe eventually over time we see lower prices. Now let's take a look at the Russell 2000. We're going to take a look at the daily for the Russell 2000, and I've been talking about this over the last couple of videos. Let me get the right one here, and you can see on the daily top line resistance right there, the blue line, and we hit that top line couple times here, 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 and most recently we did that right there. So that's the reason why we are being rejected. Of course, we still continue trading in this long-term wedge here, which one can think of this as a bearish wedge, because eventually we might break that and also break below the 50-day moving average. Now, if we take a look at the weekly for the Russell 2000, we see that just like some of the markets I showed you at the beginning of the video, we are back at this potential support level on the weekly RSI. So either make or break coming into the new week. We'll see what happens. My thinking is, given this very nice, huge move, that more than likely now we are going to get that pullback everybody's been expecting. Take a quick look at the VIX and begin with taking a look at the daily for the VIX. And for the day, up 30%, 32%, very strong. Also, we see that I was actually expecting that there could be resistance somewhere around here. We seem to have blasted above that, which is, you know, sign of the times. So we are blasting above that resistance level. Previously, we've been stalling here on the dailies, right? We've been stalling at that level on the dailies going back previous times. You know, like most recently, the previous stall was here, which was this high. So unless the VIX has a very sharp reversal, which is possible, if the VIX can just stay in this general area, let's say above 1621, then, which is this daily closing high, if it can stay above this daily closing high, then maybe this market moves lower. But if the VIX has a sharp reversal back below the blue line, a sharp reversal means that this rally is actually done for the VIX and the market could move higher. I want to take a look at the VIX from a weekly standpoint, and you can see that we moved above this top. Take the weekly closing highs there, those 2 points, draw a straight line based on the weekly closings, and you can see that we are blasting out of this range here. So we'll see what happens if we can continue moving higher. But this is interesting that we're also moving above resistance on the top lines here. This blue line, we're breaking out above that level. My concern here for the VIX is if it stalls based on the highs there. So those highs, this, if I extend the line, this is where the VIX has been having problems. As you can see, this line that I'm drawing has been problems or offered problems for the VIX, giving us highs there, highs there. We got double top there, which was this high here, which was this high again here, which was this high. So if we stall around where we close for the week, then this is a high and the VIX is going to pull back and the market is going to be back in play. So we'll see what happens. Of course, if the VIX can break out above those levels, that's encouraging. It is actually by itself encouraging. If you're a bear, it's encouraging that the VIX is trading above the top lines here. We'll see whether it can continue pushing higher. Take a look at Apple here, the stock, and we're going to take, I want to take a look at a fresh chart without the annotations, so I can begin by taking a look at the daily for the stock here. And I just want to show you that that's the break point there. So we broke down there, beginning of 2014, draw a straight line, and you can see now we formed a double top. This double top here could be a problem for this stock. It's holding around the 50. Let's see whether it's going to hold. Also happens to be support coming from that point. So we have 50 level support, or 50-day moving average support, and also support coming from the trend line, these lows here. Either they hold the stock together, or the stock breaks down and we really have a move that is going to bring the stock back to the 50-day moving average somewhere around here, around 480. Take a look at this Apple from hourly chart, and you see the same thing as the daily. Just draw a straight line from the previous highs. You can see we broke down somewhere here, which was this high. We failed at the line here, that high, failing here, which is this high, and over the last couple of hours we formed a double top on the RSI here on the hourly. So even that tells me that the stock could continue pushing lower. And you can see the MACDs on an hourly basis are also trading below zero, suggesting lower prices. Just want to show you a long-term monthly chart for this stock. This is going back to 1990. Back to 1990. Take a look at this break here. It's major break in 2000 during the bear market, the tech bubble or the dot-com bust. And so we broke down, very important that we understand this. We broke down here in 2000, okay, this level here. So now draw a straight line from the break point, and you can see we broke down precisely at this point in 2008, before the stock really had this major drop from about 170 all the way to 88 or under $90. That's a major drop. And you see that if we form uniformity like I've been talking about over the last couple of months, then this is a major high for this stock. That still remains to be the case. That's how I'm looking at it. And don't forget the back test. This line here, this is a back test, rejection there. So down about 3% for the month, for the year. We'll see whether it continues moving lower.